Good morning. This is Friday, August 12th, 2022, and here is the SEBA Bank Crypto Market Monitor. In this week's edition, we look at the potential hard fork of the Ethereum network as we approach close to the transition of the consensus algorithm from POW to POS and talk about the war on the privacy of crypto transactions. Ethereum POW fork, legit or lame? Ethereum to split into a POW chain before transitioning to a POS consensus model. Is there any merit to ETH POW, or is it a retail trap US? Treasury sanctioned all Ethereum addresses that transacted with Tornado Cash, a privacy tool and transaction mixer. Curve Finance front-end compromised. No loss of funds has been reported so far. Core US CPI at 8.5% was expected at 8.7%. Market rallies in relief. Ethereum is a smart contract blockchain that will soon complete one of the most significant milestones in its roadmap, a transition to a proof-of-stake POS model from the current proof-of-work POW model. In proof-of-work, miners provide resources, mainly electricity, and compete to earn rewards through block issuance and transaction fees. In proof-of-stake, validators stake their holdings, 32 ETH, nearly $54,000, to run a node and make the same rewards. Proof-of-stake is an energy-efficient consensus mechanism that will make Ethereum an ESG-compliant investment for regulatory-driven institutions. This transition will also cement a clear distinction between Ethereum and Bitcoin, as Bitcoin will continue to function on the current battle-tested PoE model. Ethereum's transition to POS began in DEC 2020 with the launch of the Beacon chain or the execution layer. The Beacon chain has been running in parallel with more than 13 ETH staked and around 384K validators for 1.5 years. In the upcoming Bellatrix upgrade, the Beacon chain will be merged with the current state of the Ethereum network. Users will not notice differences in token holdings, liquidity, or leverage positions. In anticipation of the merge, miners that will soon run out of business have expressed their desire to continue mining the current Ethereum POW chain. Chandler Go, one of the prominent Chinese miners, initiated the idea of an Ethereum fork. Ethereum Classic is one of Ethereum's forks after the DAO hack of 2016 that runs on the PoE model. ETH POW, or ETH1 as some call it, has stirred much controversy within the community. The reasons for the ETH POW chain are mainly centered around a backup plan in case the merge is unsuccessful. The real reason, in our opinion, is a quick cash grab by some disingenuous players. Let's understand this in detail. Ethereum has the most diverse and extensive decentralized finance, DeFi, and NFT ecosystem. Since stablecoins are the foundation of DeFi and popular stablecoin issuers like Maker, DI, Circle, USDC, and Tether, USDT, are backed by assets on the POS chain. These stablecoins will not be redeemable on the POO counterpart. Also, any Ethereum staking derivative, such as STTH and RETH, will become invaluable. Hence, DeFi is dead on the ETH POW chain at its inception. To mitigate this issue, Justin Sun, founder of Tron, also one of the proponents of ETH POW, announced that USDD would be the first stablecoin on the forked chain. He also announced that the ETH POW token, ETHW, would start trading on Poloniex, a centralized cryptocurrency exchange. NFTs are a thriving ecosystem on Ethereum. After the hard fork, each NFT may exist on Ethereum 2.0 and ETH POW. To transact that NFTs, users must be careful of replay attacks. Replay attacks are when the attacker replays the transaction of ETH POW on the ETH POS chain and obtains the user's assets. To avoid such attacks, it is advisable not to interact with the POW chain or transfer your assets to a new wallet before trading. Ethereum POW chain will not only need one hard fork before the merge, but one more to defuse the difficulty bomb set by Ethereum core developers. The total terminal difficulty, TTD, is the sum of all POW difficulties of every block accumulated on the Ethereum POW network. When TTD is reached, the network shifts to a canonical POS model, and the developers at ETH POW will have to hard fork the chain to avoid this threshold. This will require much work from developers to maintain ETH POW. Are we excited for ETH POW? Not really. We have seen many forks of Bitcoin and Ethereum in the past. In the case of Bitcoin, one might have heard of Bitcoin SV or Bitcoin Diamond. These ecosystems exist but do not thrive. Ethereum Classic had a community behind it that genuinely did not wish to roll back the DAO hack transactions. ETH is an attempt by a few upset miners and some large Ethereum holders who want to grab attention or create value for ETH and eventually dump it on retail. War on privacy. Tornado Cash, a privacy enabler and transaction mixer on Ethereum, was recently blacklisted by the U.S. Treasury. The idea was to stop illicit funding activities by terrorist groups and hackers. Even USDC issuer Circle announced that it would not redeem the USD stablecoin in these blacklisted accounts. To begin with, Tornado Cash is not an entity. It is an open source code. After statements from the U.S. Treasury, Microsoft-owned GitHub removed Tornado Cash's code library from its platform. GitHub even suspended the founder's account. The United States' war on privacy has a long-standing ban on Silk Road, Pirate Bay, Blender, another cryptocurrency mixer, and now Tornado Cash. In our humble opinion, open source code cannot be sanctioned. It always does and always will pop in some other form. Curve Finance, a stable swap automated market maker, suffered a front-end hack this week. Its DNS has reportedly been compromised, and all users are advised not to use the DApp until further notice. U.S. inflation numbers for July are out. The U.S. CPI stands at 8.5% YOY and 0% MOM. The core CPI stands at 5.9% YOY and 0.3% MOM. The market was expecting CPI at 8.7%, and a falling inflation is technically bullish for both stocks and crypto. One hopes that declining inflation will incentivize the Fed not to be as hawkish or even resort to quantitative easing in the coming future. We wish you all a great weekend, and that was this week's Crypto Market Monitor. We wish you a great weekend ahead. For more information about SEBA Bank, visit seba.swiss. This document has been prepared by SEBA Bank AG, SEBA, in relation to its activities in Switzerland. SEBA is a Swiss bank and securities dealer with its head office and legal domicile in Switzerland. It is authorized and regulated by the Swiss Financial Market Supervisory Authority, FINMA. This document is for your information only and is not intended as an offer or a solicitation of an offer to buy or sell any investment or other specific product. The information contained herein does not constitute a personal recommendation or take into account particular investment objectives, investment strategies, financial situation, and needs of any specific recipient. Certain products and services of SEBA are not accessible to residents and/or nationals of certain countries. Certain services and products are subject to legal restrictions and cannot be offered on an unrestricted basis and/or may not be eligible for sale to certain investors. Recipients are therefore asked to consult the sales restrictions relating to products or services in question for further information. Furthermore, recipients may consult their legal or tax advisors should they require any clarifications.